Imagine a world where you are 100% financially independent. You can do the things you want to do, go where you want to go, and you don't work tirelessly to make someone else's company wealthy. Sounds amazing, right? Well, getting to that point isn't easy, but you need to begin somewhere. Here is one of the best ways for you to get there. Hey everyone, Spencer Su here, your tech realtor of the Bay Area. In this video, I will provide a step-by-step guide on how to buy your first rental property. Let me know in the comments below if you want to see more of this type of content, and make sure to subscribe to the channel. I release new videos all the time. The truth is that a life of freedom is entirely possible, but it's not going to happen by itself. You need to spend time learning about and investing in things that grow over time. Here are 4 reasons why rental properties historically have been a great asset class. Number 1, as a landlord, your tenants pay you rent. Through that rent, your tenants pay down your mortgage. Over the course of the loan, you will owe less and less each month thanks to these rent payments. Eventually, you will own the property free and clear, having done nothing other than opening the door to the right people. Second, over time, real estate appreciates in value. Not only is your mortgage being paid off by your tenant, but you also benefit from the long-term appreciation of the property. Think how much you and your family could have earned since, say, 1980 if you owned a waterfront property in the Bay Area during that time. Heck, how about since 2012? The value of the average Bay Area property has increased by over 100% over the past decade. Number 3, yes, you're getting someone else to pay for your expenses, such as heating, gas, water, electricity. As the owner, you're still going to be on the hook for annual property tax, insurance, landscaping, etc. But depending on the area and price range, you still may be earning a cash flow in addition to breaking even on the mortgage. Essentially, you're getting paid in both the short term and the long term. Number 4, there are amazing tax benefits to owning rentals. You can often deduct your rental expenses from any rental income you earn, thereby lowering your overall tax liability. Most rental properties include mortgage and property tax, repair and maintenance expenses, potentially some home office expenses, insurance, professional services, and travel expenses related to management are all going to be deductible in the year you spend the money. There are also the aspect from a tax perspective we call depreciation. Contact your tax professional to learn more about that, but those are all the different things you can deduct from your rental property. So how do you buy a rental property? How do you even begin? Before we get to that, be sure to subscribe and like this video so I can continue producing these kind of high quality contents for yourself. Step 1, just like when you're buying any home, you're going to need to get pre-approved and figure out your financing, unless you're paying in all cash. For your first deal, finance through a bank or a local lender. The down payment they'll require will vary based on your specific situation, but most commonly, because it's an investment property, it's going to be between 20 to 25%, which is higher than required when purchasing a primary home. Be mindful that interest rates for investment loans tend to be higher than what you might get quoted for a primary loan. Now, if you don't have enough cash for the down payment, you may want to partner with somebody on your first deal. Maybe go with a friend or family to decrease the risk of both of you and be able to share in the rewards. After you finish pre-approval, it's go time. Consider which areas fit your budget. Each market in the United States has different price ranges and different rental figures. You don't have to buy where you live. Once you have a sense of potential options, the next thing to do is to build your local team. The 2 main resources you must have are a knowledgeable investor-friendly realtor and a property manager. The realtor will help you find the right property, and the property manager will help you earn the money you expect while minimizing risk. This is very important if you're doing things out of your area. If you're doing within the area, you may elect to just save money by removing that property management fee. So how do you find these people? There are several ways to do so. First, you can always end the search now and reach out to me. I have connections across the US, including realtors and property managers. So to be fair, it's going to be the quickest and the surest option because I always vet the people that I would introduce you to. If you want to do it yourself, reach out to the top people by researching reviews and transaction numbers on Zillow. Start a conversation with them. Just see if they understand your goals and are willing and able to help you. Be sure they're responsive. You want a fine mix of busy and friendly people. Now that you've secured your all-star team, it's time to find the investment property. Talk to your realtor about how best to analyze a property. Some questions to consider. How much can you rent that home out for? Zillow is the best aggregator of rentals, so it is a great resource to understand area rent prices. Find the areas that cash flow the best. The other component you need to figure out is your total expenses. These include property tax, mortgage, property management costs, insurance, how long you will be vacant for, and repair work or renovations. Now that you have a revenue and an expense sheet, how does it look? Are you happy with the results? Of course, this is a snapshot and doesn't account for future rent and price changes. It's up to you to balance your predictions for the future of the area's housing market with your short-term needs. Once a house is analyzed, it's time to get ready and move forward with an offer. This process is no different than the process of buying a primary home. Review the disclosures, ensure you have the proper inspection and contingencies in place if they're not already provided, and try to buy as low as possible. Don't forget, your goal is also to get started and avoid analysis paralysis. You have the education and knowledge, now it's all about the execution. Be mindful that in real estate, the unpredictable occurs. Keep monetary reserves so you can ride out the bad times if they come. The more you do, the more you'll learn. Finding a trusted realtor will minimize the hiccups you experience along the way and will both make and save you money in the long term. If you like this video, remember to like the video and subscribe to the channel so you never miss out on an update. Share this link with family and friends that are considering to buy their first rental properties. Feel free to contact me with any questions you have, whether seeking connections in a different US city or insight into the current real estate market. And if you're looking to buy or sell anywhere in the Bay Area, my team would love to be your trusted local real estate resource. Call or text me at 408-547-4590 for a free investment strategy consultation. Thanks for watching. I'll see you at the next one.